When your mind works against your trades, it can be a real challenge. As I have mentioned before, one crucial aspect of successful Forex trading is letting your winners run. No matter how you approach trading, there are three fundamental principles for success. First, let your winners run. Second, cut your losses quickly. And third, protect your capital. While these may seem basic, most traders you'll find online fail to consistently follow one or more of these principles. Why? Because it's simple to understand but not easy to execute. Let's break these down. First, letting your winners run. If we were to judge three traders on how well they perform this, who would you say is the winner? Trader A has a risk to reward ratio of 1 to 0.25, meaning for every $100 risked, they aim to gain only $25. Trader B scales off their position over time. Trader C trails their stop from the start, allowing the trade to potentially capture larger moves over time. I'd hope your answer is Trader C. Remember, in economics, it's often assumed we act rationally and analytically, but that's not always the case in trading. Sometimes traders scale out of positions because they believe it smooths out their equity curve or helps manage risk. This pressure can come from prop firms or strict risk metrics, but whatever the reason, they've done two things: limited the potential to capture significant gains and prioritized emotions over profits. And it's easier to see a series of small wins with some big losses than to endure small losses with a few massively offsetting wins. And when it comes to Forex, most people forget it's a relatively boring market. This lack of extreme volatility compared to stocks creates an environment where trailing stops and letting winners run is easier and more effective. Next, let's look at cutting losses quickly. There are several psychological and practical reasons why traders struggle with this. One, emotional attachment. Traders become emotionally tied to a trade, especially after heavy analysis or a strong belief in market direction. This leads them to hold on to losing positions, hoping for a reversal. Two, loss aversion. This cognitive bias causes people to fear losses more than they value gains. Traders might avoid cutting their losses because accepting a small loss feels more painful than risking a bigger one later. Three, overconfidence. Some traders overestimate their strategy, believing the market will eventually turn in their favor. This overconfidence can cloud judgment. 4, hope and denial. Traders might deny reality, thinking their losing trade is just a temporary drawdown instead of recognizing it as a fundamental mistake. 5, lack of discipline. Cutting losses requires discipline. Many traders either don't have a solid risk management plan or lack the discipline to follow one. 6, fear of missing a reversal. Some traders hold on to losing positions, fearing the market will reverse as soon as they exit. 7, inadequate risk management. Without a clear risk management plan, traders fail to set predetermined stop-loss levels, allowing losses to grow unchecked. 8, sunk cost fallacy. Traders justify staying in a losing position because they've already invested so much time and money into it, making it harder to cut their losses. Recognizing these tendencies and having a predefined risk management plan can help you avoid letting losses run longer than necessary. Let me know in the comments if any of these resonate with you. Lastly, protecting your capital is one of the most misunderstood concepts on YouTube. Many traders quote Warren Buffett's rule. Rule number 1, never lose money. Rule number 2, refer to rule number 1. Yet, almost every trader then proceeds to show you methods that don't prioritize capital protection. Here's a simplified analogy. When you open a new account, go on the offense. Focus on making profits. However, when you hit a losing streak, switch to defense and work to bring your account back to break even. Most traders treat every market situation with the same plan, failing to adjust for drawdowns versus profitable periods. This is how we truly protect our capital. As I've mentioned in previous videos, I've been trading for nearly 12 years and have never blown an account nor a losing year. These are the major factors why. Focus on improving these 3 areas in your trading, and you'll begin to separate yourself from losing traders. Comment below with suggestions for the next video, and until then, signing off.